Today we're getting on the bus. We're gonna do the ugly house tour. I can't believe it's been 6 years since we've done this. We're gonna hit the road, go check out 4 properties that we can add value to and hopefully make a little money. So yeah, I'm excited. We haven't done an ugly house tour since 2018. So I thought it was like 2 years ago. No, it was like 7 years ago. A little bit different. We're not looking at it through the lens of a flip, but rather through the lens of a BRRRR. It's cool because we just got out of our property management meeting and I asked them again, what is the sweet spot right now for getting rent in relation to purchase price? And they said, for sure, single family houses. We've got 4, I had 5, 1 sold. So they didn't want to have a bus load of people through after they sold. And the houses we're looking at are all in the lower mission and the upper mission. I chose that area because it's a very sought after area for rentals. So you can command a premium. This is the market rent grid that our property management team puts out. And so everything we're looking at is 4 bedrooms plus. And so you can see what I've highlighted. And what I want to kind of showcase today is the difference between kind of basic or average and then luxury. And then there's a little thing down below where you can see it says add 10% for downtown, lower mission, so any premium neighborhoods. So these numbers that you see, you could add another 10% to those easily for that. And so the difference between something that's currently basic or average in rent versus something that's on the higher or nicer end is roughly $1,000 a month, which will usually more than offset the mortgage costs. You're less than $500 a month now with rates coming back down. You're less than $500 a month for every $100,000 you borrow. So if you think about that, to cover the extra interest you would cost you on a mortgage after a refi to do a $150,000 renovation, you're looking at $750 a month. And I think that the rents here demonstrate that keep you positive cash flow on that. You'll have an upside from a cash flow perspective. What I want to try to consider when we're looking at all these is like, okay, using this tool that you have, what would we get on a monthly basis for rent as is? And then after it's all fixed up, what do we think we would get for rent? And then this next page here, I highlighted a few things, but I want to show you kind of the range. So this is based on sales. So I did the market analysis to kind of show that the price per square foot kind of starts at about $280 a foot, and it goes as high as $500 a foot, the kind of the max, just on the recent sales in the last 90 days. Realistically, if you look at it and say, okay, if something's a dog's breakfast, it's probably worth $300 a foot. And if it's nice, it's probably worth $500 a foot. Because actually, when you look at what commanded this $500 a foot, it wasn't even that nice. There's price elasticity beyond $500 a foot. But if you just look at it, that $300 to $500, the average lipstick renovation is going to cost you less than $100 a foot. So if you're spending $100 a foot to get $200 a foot in value, then you're getting that sort of 2-to-1 return on that investment, which is what we want to do. We don't want to spend $1 unless we're getting $1.50 or $2 out. I just wanted to show you that like the stuff that we're seeing, and the first one we're going to look at is a really good example of it. It's a property on Schaefer that's currently listed for $850,000, and it's 2,600 square feet, so it's a good size. It's 4 beds. We're going to take a peek at that. It's at $850. It's the least expensive home that we're going to look at. And then you'll see there's one that's listed just 2 doors down, and they're asking $700 a foot for it right now. They're not going to get it, but they will get north of $500, and it's really nice. So you can kind of see that the street commands it. It's a 1980s house with a remodel. So when we go through, start with the right-hand column and just kind of write down things that you see that you would want to renovate, and think through the lens of like resale and increasing value from a rental perspective, all that stuff. Don't worry about what it costs. We'll kind of workshop that as we're driving. And then we'll figure out roughly what it would cost to get this place up to snuff. Then we'll contemplate based on its square footage, what the after reno value will be. And we'll kind of work through the worksheet to see if it's possible that you could not only make a return on your investment, but pull all of your capital out when you're done. The idea with BRRRR is to take the same 300 grand and rinse and repeat it through as many of these as you can. And if you can get them to the point where they're even cash flow neutral and you're able to recycle that same capital, you can build a really nice little portfolio. That's what we're going to do today. We're going to go through it. Some of these things are going to fit the mold perfect, maybe like Schaefer. Some of them are not going to quite fit, but we're going to go through the exercise. I'd love to know just from you guys though, like, what do you want to learn today? What are you kind of hoping to get out of this tour? I just want to make sure I nail it on all accounts.
As you mentioned, the BRRRR strategy, how we can create more value and then refinance and generate capital and liquidity in this market. Circle going to invest further in other properties.
Rob, you got anything you want to figure out today?
I'm just interested in seeing a handful of properties. I'm actually currently looking at a place right now.
Yeah, nice.
We may even drive like right by it. It's a private sale.
Yep.
It's not listed, but
yep,
we may go by it. It's on Hammer. Yeah, anyways, yeah. Just wanted to go check out a bunch of places and just get some dialogue going, see what different ideas people have.
Learning like how I can cash flow in this market.
Yeah.
It's my biggest thing. Like I'm definitely ready to start looking at another. But we're running numbers and stuff like that. I just have a hard time seeing how I can actually do that after all the financing, everything like that.
Yeah.
The thing is just how much you really have to put into a house to make it you know, to get that equity, you know, built up in it,
Yeah.
appreciation and stuff like that. Like how much money do I need to spend on like particular parts of the house?
Right.
You can spend on landscaping or siding or, you know, just things like that. Should I look at legalizing the basement suite? Like, versus just trying it in last suite, see what happens that way.
Well, to that point about suiting, it's interesting that the change has happened in the last little while. So in our PM meeting, we were talking about, they're saying the advice that they would give any landlord right now is, if you're thinking about suiting the place to try to do the up-down program, don't. Rent out the whole house. You'll actually get a better premium on a whole house. And then the only caveat to that is, and they had some success with it, saying, we'll rent you the whole house. And then if you want to run Airbnb, because the tenant can also do Airbnb, they can apply for a license for a property they're renting, the suite potentially as a reason to charge a premium for the whole house, that the person renting it could get their head around that premium because they were going to make the Airbnb revenue.
I'm a designer. I was sharing this too, but I've worked a lot on renovation projects. But I would like to see that from a basically investor perspective. As an investor, I want to see what's worth, putting money in and what's not.
Do you have a pretty good sense of what stuff costs? So like
Yeah.
when we go, yeah, so that'll be good. So you'll be helpful in sort of workshopping it with us. I have sometimes had a tendency to be thinking in like yesterday's renovation costs, and I've been really shocked by some of the quotes I've gotten on stuff lately. And I'm like, because I'm doing a remodel right now, and the quotes I'm getting back, they seem like double what they should be in my head. I'm really trying to like be conservative now with what I tell people they can get stuff done for. You used to be able to do a 30K could go a long way back in the day, where you go into a buy level and you could remodel the whole upstairs for 30K. You spend 7-8 grand on flooring, a few grand on paint, a few grand on base and case, laminate countertops. You know, there was a lot you could do, change out vanities and all that, and all stay under 30 grand. It's 100 grand now. Oh, we're getting back to the point where in Kelowna, single family houses are starting to make more sense because prices have gone up on this kind of stuff. Prices are down on partial home stuff. Our full house is up. Yeah, so like because there's so many nice new condo projects like 5 Crossings and all these places that have amenities and everything, if someone's going to spend $1,750 on a 1-bedroom, it's not going to be in your basement suite. They're going to go to 5 Crossings where there's a community and there's amenities and all that stuff. So now if you have a house, it's different clientele. They don't have a whole bunch of rental houses to compete with. There's very little. So you have the market cornered, and there's lots of people who can't afford to buy, so they need to rent. And so there's not much there. So you have supply and demand working in your favor. So the rig's it's not super fast, is what you're saying? Did you say you opened this up? Oh yeah, you did. Okay. So kind of a choppy little layout. So first thing I'm seeing is the sunshine lighting, right? Easy change to go to pot light situation. This flooring is salvageable, but it depends on what you do here. If you end up opening anything up, then you're not finding this floor again, right? So you may want to consider new floor. The old white melamine kitchen's not going to get you the top dollar, right? So you got kitchen, you got floor, you got sunshine lighting, needs appliances. The low ceilings make it kind of tough to get like real luxurious feel. So I would say we for sure need an ensuite. Your 3-piece in here, you got to do a shower, you need a tub and a new pedestal, and you need floor. So the entirety of the ensuite. Master bedroom itself is not very big. That's a challenge. Yeah, it's freehold, but what they did was they carved off a lot in the back. So it was a big property, and so they would have done a subdivision of the lot. And the way to do that is you have to do a bare land strata. So there's no strata fees or anything like that, just slightly different title. So the master itself is pretty weak. That's one of the things that I look for is like, if you're going to try to get premium dollar, you're going to need a pretty nice master bedroom to attract premium rent, which you don't have. Possible that you would reconfigure and make, that big room there into a more luxurious master is possible. The problem is getting an ensuite over there. It depends on, you could maybe get your plumbing and everything to work through the wall, but this layout's tough, for sure.
What do you think?
It's a lot of walls.
Low ceilings again. You got this drop ceiling again, which is not conducive to premium rent. Many walls, much wallpaper. Is this textured, spongy, or is it a wallpaper? It's a wallpaper. You're going to be scraping these ceilings too. Just a lot to spend to get it right. Well, this is the least expensive house we're going to see today, and it's obvious why. But it has potential. You just have to be willing to roll up your sleeves on this one. Every inch of this property needs to be renovated, and it's not what I would call a lipstick reno. These are not low-hanging fruit renovations, which is kind of what I like. This is one of those ones where you start opening it up and you find a whole bunch of other stuff that maybe you weren't bargaining for in the beginning. And these bi-level houses, I mean, they can only look so nice when they're done. And so they don't warrant $250,000 renovations typically. You want to be able to get in and out in 100, 150K. And there's more than 150K worth of work here if you're trying to make every inch of it nice. So we'll add it up once we get back in the van, but I think you'd have to buy this thing. And that's the exercise here, is what would you have to pay for it in order to make it make sense? We'll be back in the van and we'll figure it out. Do we want to take a quick peek at that yard, or did we see it? So, I mean, there's homes all over the block for $1.5 million, $1.7 million. It's not crazy to think that you could spend the money and get it back, but it's a tough little layout to figure out. I wonder if a person could even eventually build some sort of like a carriage home or a guest suite here. You got a big enough lot that I think you could probably add a carriage, which could be kind of cool. Got a perfect spot for it right there to have a guest suite. And I didn't see the pool on the other side, but is it?
Looks pretty rough.
Pretty rough. Obviously, you wouldn't have to spend a ton to make this yard green again, and just that alone would increase your value a ton, right? The low-hanging fruit here is probably more outside than inside. If you do the garage door and get rid of the shutters and trim them out properly. Well, let's brainstorm what you'd spend on renovations, figure out what we think would be worth done, just for the exercise of it all. They're not asking crazy money. In 2021, this house would have still had a 1.1 tag on it. They would have been trying to get. They would have listed it at $1 million. It would have ran to 1.1 in multiple offers. Okay, so let's just look at it. That kitchen needs everything. It's not a huge kitchen, but I would say you probably got to put $40K into that. If you could go into that bonus area, steal that, get some more kitchen, have a little bit of an open concept living room. I think that would allow you to do that. Every inch of flooring in that house needs to be done. $10 a foot times 2,500 feet. So you have 25 grand in flooring. Simple math, right? You got 3 bathrooms that need to be done. I think your main bath, you're probably spending 10. I'd say that ensuite, you're probably spending 5 because it's small. It's just a little shower. And then I'd say that the bathroom down below, you could probably get away with 5 as well. So you're 30,000 there in bathrooms. All of the ceiling downstairs and all of that popcorn ceiling and all the drywall that's got all the wallpaper on it, that's gonna cost you 5 grand, probably maybe 10 to do the ceiling too. I've listed 110,000 in things already. We haven't done any landscaping. We haven't done any exterior, right? So you might spend 10, 15 grand cleaning up the exterior. You might spend 10, 15 grand in the landscaping. So all told, if you did all that, do you think it's reasonable that that could be a $1.1 million house after 150K on it? With the pool and everything up and running, and you think so? Just for easy math, let's say this reno budget is 150. So now 180K down plus 150,000 in reno. So your total cash is 330. After that place is all renovated and titled up, you're probably looking at probably 4,200 a month. Your mortgage payment's going to be 3,600 a month. It's you're roughly $320 for every 100,000 that you're financing. You can refinance out 75% of 1.18. You're going to take an 825K mortgage in the end on it. 195K on those numbers would pop out. That's what you would have after the renovation. So you wouldn't get all your money back. You'd still have 130K sunk cost. 275,000 in equity. And you've got a property that probably cash flows a couple $100 a month after your property taxes and what else? It's probably more like a break even realistically. That's okay. Yeah, I'll leave her there. So a little bit bigger. This one's 3,200 feet. They're asking 1.15. They were originally asking 1.2. Didn't get it. This is kind of the after in a lot of ways, right? So they've already gone through and done what you'd be looking to do with a house like that. If you're picking up those bi-levels that are choppy, you want to turn them into this easy, open concept. This one again has the lower ceilings as well. Doesn't feel as closed in though as the last one. It's a bi-level and it's kind of at the top of the price range that you'd be trying to get the last one too. So it shows you kind of where the market is right now. This main bath's done as well. So you can see like this is the same bath we just looked at, but having renovated it for 10 grand, that's what you can accomplish. What gives this house an advantage over what we just saw is it has an actual master suite, like a proper master that you'd want. So you got a decent sized room, you got a closet there, a walk in here, and then you've got a really nice full size ensuite there. So this would be like a turnkey rental at $4,400 a month in rent. What are your thoughts on this one?
It's a nice house.
Doesn't seem like it needs a lot of work. It's like a lot of things have been at least fairly recently updated. Beautiful backyard. Very, would be a nice place to live.
What are your thoughts on this house?
Nice house. I like the part you don't have to do anything to it. It
Yeah.
makes it much easier. So, yeah, basically come in, clean it up, rent it, and away you go. So do a little bit of work in the backyard, and it's very nice. Nice place.
Well, this is the caliber of renovations that you want to do when you're looking to maximize rent and resale. Didn't go too crazy. It's not over the top, but everything's done. So from a buyer's perspective or from a tenant's perspective, it's turnkey. It's, relatively modern in terms of its finishing qualities and that kind of stuff. And so it just feels like home. It's nice. It's neutral, and you'll get good rent for it. And they're going to get top dollar for a house of this era in this neighborhood. So this is the way you want to do it. This is the after from the house we just saw. There's a conversation to be had about making this into a little Airbnb suite. This is really nice out here. Deck, the hot tub. Knock some lights off as you go.
We can do it.
We missed the whole suite. So you can make this way nicer and make this into a Airbnb suite. And forget doing it on the other side. In this one here, if you consider the fact that you got well over $4,000 there and probably, $800 a month there, you're north of 5K. Now the numbers start making sense at 1.1, right? Got lots of parking. Kind of cool that you got parking on both ends. Split driveway. It's a pretty nice setup. Roof seems new. This is only at $400 a foot. So this is at mid pricing. Neighborhood commands 500 if it's nice. So, 500 at 3,100 square feet. This house could be $1.5 million to be at the sort of top end of its price elasticity. So you could spend some money. You got some room between 1.1 and 1.5 to do that. So the house could take it, is the point. I think the play is there to make that suite like crazy nice. Like it's small, but like you look at how they're making the bachelor apartments in the new places, like how they're really good uses of space. You make that a really like sexy little kitchen, go to some really nice floor, paint it a modern color, upgrade that bathroom so the bathroom feels luxurious, even though it's small. Like you might spend 25, 30 grand in there, but I think you're gonna get that out in a year. So that renovation to the exterior is going to probably cost you 35K, I'm guessing. If you did that, you've spent 60 grand now on it. Your rehab cost is 60,000. After reno value, hard to imagine that place not being worth 1.3. You take it 3,100 square feet and you're going to say 450 a foot, not 400 a foot. You're not at the top end. I think you're probably good there. So I would say your ARV is $1.3 million. If you said to somebody, listen, you can have the Airbnb suite, it's nice, you'll get lots of revenue from it, but you got to rent that house off me for $5,500, I think they'd pay $5,500 for the whole suite. I think they would. Maybe scale that down to $5,300 just to be safe. Your payment after refi on this is, for following along, is $4,300. So you originally had $825. So you're going to pull out, sounds like $150, right? So you needed $335 in cash. You're only getting 150 out at the end. The era of houses now that are 20 years old are kind of like ripe for renos. They can look nice. They got the high ceilings. They got the open concepts. They don't have to do as much structural renovation. It doesn't look like anybody's Pinterest board anymore. So this one, they're asking just over $1 million. It's been on the market for 30 days. It's a 4-bed, 4-bath, 3,200 feet. You can have an in-law suite. You can't have like an exterior door splitting them. And you're not supposed to have full-size stove down below in an in-law. They're not really cracking down on them, but if the bylaw complains, then you have, they have no choice but to
Shut you down.
shut you down, yeah. So this is an in-law, though you can see there's no stove, right?
This is legit.
So this is legit.
Yeah, this one's an interesting one. I mean, there's not a ton of potential to really increase the value. It's kind of one of those ones where it's like, I mean, you could rent it out as is. It's not like a huge margin, so it maybe wouldn't make the most sense as like a BRRRR, which is what we're looking at. But I mean, it's an interesting one. It's a buy level, which is, not necessarily the biggest thing these days. So, I mean, some of the others maybe had a bit more potential in that sense, but it's still a nice place.
I mean, I think it's decent value for $1 million. You're not getting into this neighborhood for under $1 million, that's for sure. It's a weird little layout. Houses on the street are seemingly, that are much smaller, are selling for the same money. So price per foot, this is the best value on the street. I can see why it needs to be, because it is a bit of a goofy, sweet setup. But I think as is, you could probably break even on this place though, like cash flow wise. I don't think you're not going to make this into a $1.3 million house. It doesn't have the bones for it. What did you guys note? What could you do to it? I mean, the house finished for this street kind of maxes out at $1,150,000. Where could you potentially spend some money to make some money on that house? Flooring when you come in, if there was a way to knock that bulkhead ceiling out, that could dramatically change it. It's an example of just doesn't have the bones to effectively renovate and raise the value. If you could buy that house for $900,000, I probably wouldn't do much to it. I would just hang on to it, let it cash flow. Like if you can, that house will sit for a while. It's nobody's dream house as is, so you could make a 10% below market offer, and if you get it, great. I wouldn't go crazy trying to renovate it though.
Would you have a hard time renting that house out?
No, it'll rent. Great. Just always going to be a little goofy on the resale. I would say a good 50% of the suites in Kelowna are technically in-law suites. Yeah, and most of them have, they probably started off with a stove and then probably had to decommission it. Most people don't start off doing the hot plate and the microwave program. Most people start with a stove, and then there's a bylaw complaint. Usually it's a disgruntled tenant, kick somebody out for non-payment of rent. They'll be like, screw you, I'm calling bylaw. So we're heading into a neighborhood that's obviously a little higher end than where we just were. This is gonna be commanding a higher price point. The place we're looking at is a higher price point. Well, it's 4-bed, 3-bath. Been on the market for 2 months, but it has a lake view. It's got a big lot, so lots of frontage, 0.28 of an acre. And I think it's a 95 build, so it's gonna have some quirky, weird stuff in it for sure. But I think that it has a decent exterior eyeball. Could be made to look really nice. I like trying to do remodels on 90s houses in areas where there's a lot of new construction, because I feel like the 90s house still has some of the architectural stuff that lends itself to the new era, but it usually needs everything. So you usually get to buy it at $300 a foot instead of $500. This street's really well established. The trees are all nice and mature. The houses on the low side are all kind of like $1,600,000, $7,000, $8,000. And then the houses on the high side range from sort of 1.2 to 1.5-ish. First thing I see is a garage door on that. If you went to a glass garage door and you painted that house like a creamy white instead of that peach color, you could make that house look really, really smooth. Full kitchen, but warranted, right? Like, it's a shame too, because this was really nice in the 90s. This would have been a really nice custom kitchen in the 90s. You've got the ceiling height, you've got, the open concept, the cool architectural staircase. So you've got a full kitchen remodel. You've got, I would say all the flooring on the main level, as much of a shame it is to pull this really expensive real oak flooring up. You could refinish it. It costs you almost the same. You're $6-7 a foot to refinish. You don't. Yeah, you could, but you're $6 or $7 a foot. So I would do flooring. New gas insert, those are going to run you $5-6 grand for a decent insert, like long linear, right? To go to something a little bit more modern. I like this layout though. I actually don't mind the fact that it has the dining room there, because this is also open, that it has its own little dining room. The deck's awesome. There might be an argument for changing out the railing system. What do you think, Ter? No idea. Right? 3-piece bath here to do here. Good bones. So the question is, can you keep the tub and do a new surround, something that's modern, that flows with the floor, a nice tile on the floor wrapped up around this? You could probably keep that nice 2-person jacuzzi. Definitely got to change out the shower. You could spend some money in here, but I think you got the square footage, which is cool. So I mean, a house like this could handle the investment, and you're not going to run out of runway like you would in the last one we were in, where it's like kind of caps out at 1.1 on that street. You got this street similar to the house we went to. For the first one, you had runway there, right? You had runway to go from 850 up to, you got neighbors asking 1.5. Similarly here, you've got neighbors in this neighborhood that would be asking $2 million for houses on the low side that were renovated. So you could be, it could be in the mid to high ones here after renovation, no problem. The market's rejected it at the 1.345. So, there's a good argument that it's at least 5% overpriced. So you're getting this in the 1.2s somewhere, but it's 3,360 square feet. So, at 500 a foot, you're at 1.65 done. I don't think this is a $500 a foot house finished, given that it has a view and it has a big property. I don't see a world where you're not getting 500 a foot here. Why this house is not selling is because people are looking at it going, it's nice, but I'd have to change everything and I don't want to live through that. Yeah. Right. And when people don't live in the price, they live in the payment. And so now that rates have come down, if you consider they could go buy something for 1.5 and it's only going to cost them another, the difference between this and that is going to cost them $750 a month more. If you're shopping in this price point for an extra $750 a month, I think I'll just take something that's turnkey. Thanks. And the cash, right? Like a lot of people can handle $750 a month, but they don't have the $150 to put into the house. Yeah, you got to paint, you got to change out to like white Decoro switches. And even the view this way down Okanagan Mountain Park, the mountains and everything, that's gorgeous too. I like the double doors when you get here. I think those double front doors are really nice. That's a touch. I wouldn't change those at all. I'm trying to figure out what this space is. It doesn't really have much like recreation space, so that is what kind of this is for. This is like your little party room. So what did you say the deck and railing was going to cost?
I'd probably say 20, 25 around there.
Okay, so let's go 25. Pretty much every inch of flooring in that place needed to be done. And I want to put a garage door on it. So that's another 5. I love those front doors. They don't look nice with that peach though. Like if you had the right colored, even just like the right color gray on the house, those doors would pop really nice. A little bit of landscaping, fireplace area there. It's probably 10 grand touch to do a really nice job. Ensuite, because you're keeping the tub, I think you could still probably go in there and spend $10,000. A 3-piece bath is going to run you $5 grand. What do you think that kitchen's going to cost us to do?
Kitchen?
Yeah.
35.
Yeah. I think you're right on that. 35, 40. And then you just got like just fixtures, odds and sods. You got a lot of brass you got to change out. So you're $5 grand in fixtures. Your base and case, probably 5 or 6 grand there for all that. Maybe let's say 5. I'd say you're 175,000 to make that place like right as rain. The way I always want you to look at this too is like this initial run is like your napkin pro forma, right? You're just trying to see if it can pencil. And then if it's like, okay, that seems like it's in striking distance, then you take the next step and you start, actually dialing in the numbers. And this is where you're working off a spreadsheet and you're, properly figuring it out. But this is like level 1 analysis. You don't want to do deep analysis on every property you look at. Otherwise, this becomes a full-time job of analyzing and underwriting. You want to have a couple quick and fast ways, little acid tests to get you to where you want to be. The after reno value on that place though, you're buying it at 1.3. So if you spend 200 on it, you're already into it for 1.5. It has to be worth more than that. I think it's worth 1.7 done. Maybe 1.65 to be conservative. Maybe be really, really conservative and say you're $1.6 million. Your ideal scenario, if you're spending 200, you want to double it. Ideally, then you want to be at like 1.2 on the house if you're only at 1.6, right? If you're at 1.65, then you want to be 400K back of that, so you want to be 1.25. Perfect world is you're creating $1 of equity for every additional dollar you're renovating in, right? So when I look at what that cash offer price would be, I try to see like, have I created enough value that if I double this, I can get that within striking distance? Or another way of looking at it is, if we want the fastest math that you can ever do, you don't really want to pay more than 70% of after reno value for a house. After reno value on this is going to be 1.65. So you times that by 0.7, right? And you're going to be in the 1.2s. And then how do you get to the after reno value really quick? The top end of price per foot in the area is $499. Bottom is 300. So low is 300, medium is 400, high is 5. House like that, view, all that stuff's going to command 5 for sure. 5 times 3,100 square feet or 3,200 square feet gets you to the $1.6 million. So if you use $1.6 million as your after reno value, and then you say to yourself, okay, what's 70% of that? Yeah, 1.12. So the ideal number to pay for a house that's worth 1.6 when you're done is 1.12. How I quickly try to see if there is potential value is this house being marketed at a price that's well below the potential in the neighborhood on a price per foot basis? That's step 1. So if it's already asking $550 a foot or $450 a foot, there's probably not a lot of room for me to, if there's nothing on the street or in the neighborhood that's sold for that kind of money per foot, There's no room for me there. So in a perfect world, if I'm going to spend 100 a foot to make it nice, I want to create 200 foot worth of value.
Do you have much experience with carriage houses as
Yeah.
far as how much they cost?
Yeah, you're going to be like 275 a foot. So if you spend 300 grand on something that was like 1,200 feet, that's probably where you'd be.
What would the after value of that be?
You'll get a bit of a lift on it. It comes down to what you can rent it out for. So if it's like a 2-bedroom carriage house, you're getting 1,800 a month. 1,800 a month times 12 is 21.6 times 15 gross rent multiplier. 324. If you could build it for 280, 290, it probably adds 324,000. 15 times the gross rent from an investment perspective is kind of where value is,
Okay.
if that makes sense.
Yeah.
Just another little math hack.
You have a lot of these sort of ratios you're talking about in the course
Yes.
concept. Okay.
Yeah, that's what we're going to be doing. For starters, there's never going to be 4 or 5 absolute home run properties you can look at in a day. That give you a cross section though, right? Of like from 850 all the way up to 1.3 in a neighborhood where we're trying to figure out kind of the bottom end of the price band all the way to sort of the top of the price band. We didn't look at anything that was asking 500 a foot. That again was about 400 a foot, right? We saw some stuff at 300. I would say put that at an average, right? What we just saw was average. We saw a bunch of stuff below. I think the best value on the day is maybe Roma. The last one would be fun as a designer for you to sink your teeth into. Like that would be a fun project because when you're done, like you'd be really proud of what you had there. There's an old little pocket above Knox Mountain Park, but below High Point, like below the rock face, that little neighborhood in there. Not a lot comes for sale in there, but I flipped a house in there last year. I bought it for 900 and flipped it for 1.15. Didn't cost much to do the reno. I think it was like 100 grand. Just lipstick.
Yeah.
Didn't do anything too crazy. Just made it not peach. Changed it all to gold, and I just painted it white. It was just like you'd be amazed how often just painting something white and changing the gold, it's just like all of a sudden it's a different house, and people can't see past it. They literally come in, they're like, nope, gotta go. It's like, it's just paint, right? We can do this, but people don't want to do it. So we consult people on how to maximize their home sale. And even if they don't have the cash to do it, we have a whole program. It's called our fix and list program. So then we can go in there, execute the renovations, and then they can pay us when the house sells. The average person has a very hard time seeing past what's right in front of them. They can't even see past people's clutter. Like they see people's furniture and stuff. I'm like, why are we looking at the furniture? It's always amazing too, like when you got some of these houses that are hoarder houses and all that stuff, and when you strip them all back and then you sit back and you're like, this ain't bad. So I'm gonna send out a Zoom meeting invite. We're going to meet Thursdays for the investment bootcamp. It'll be in the afternoon, similar kind of timeline. And then every meeting will be recorded. You'll always have unlimited to the recordings. I'll teach something new for 12 weeks. There's always like the live kind of deal analysis. If you're looking at something and you want to run it by me and kind of get a second set of eyes on it. Core piece of content each week. And then you'll have it'll all be kind of sequential. And by the end, you'll have your buy box. You'll have the knowledge and the confidence that you've got a game plan. And then, anything that you guys need along the way or want to learn or understand, there'll be lots of opportunity for Q&A and questions and just get your guys' questions answered. All right, that's a wrap. Well, thanks to everybody who attended the Ugly House Tour. Thanks to everybody who watched the Ugly House Tour. And I'm looking forward to seeing you on our next Thursday call.